watching Business World Live. I'm Danie Laurel. It's 10 a.m. this Monday morning here in Metro Manila. We're just kicking off a new trading day, about 30 minutes into trade. Let's go straight to our top story. It could take at least 2 years for Philippine exports to recover. That's amid a slowdown in operations due to the health crisis. This is according to DTI Export Marketing Bureau Director Senen Perlada, who says exports may return to the green in 2022 only if it manages to remain flat next year. Perlada says the agency is bent on aligning its exports forecast with the Development Budget Coordination Committee, or the DBCC, which has earlier slashed projections. The DBCC's updated outlook pegs the contraction of exports at 16% from 4% for 2020. It, however, maintained a growth estimate of 5% for next year and 2022. The 2018 to 2022 Export Development Plan approved by President Duterte in 2019 targets a compound annual growth rate of up to almost 10% for goods and services and revenues of $122 billion to $131 billion by 2022. Perlada says there is nothing that will enable the country to meet those targets, as he attributes the slowdown to the lack of government subsidies. The agency sees overall exports dropping by as much as 21.4% next year. In contrast, PhilExport President Sergio Ortiz Luis sees a rebound in exports as early as 2021, saying growth could depend on market recovery. He is expecting a return in demand for electronics and mining products. Now, in terms of the overall economy, Capital Economics says the slump may persist in 2021. The think tank says rising infection rates and the weakness in the job market and industrial data may let the economy stay in the red until mid-2021. Capital Economics sees a contraction of 8% in GDP this year. Let's do a quick health check of our local unit on the back of all of those news surrounding our Philippine exports here. But take a look at that. We are actually strengthening a touch to 48.57 to the greenback. This as we traded sideways over the past few weeks, but still are the strongest we've seen for the local unit in about 4 years. Now, this, according to some economists, the peso may be remaining strong, and that's not just because of our strength in the economy, but basically due to a weaker dollar and low imports. So this, according to Mike Ricafort, we may still see the peso continuing its gradual appreciation trend, at least for the rest of the year, because of the fact that there is a slowdown in economic activity, and that would slow down our imports. So we had reported earlier on a slowdown in exports, but also there will be a slowing down of imports. He also notes that there's a record high gross international reserves. Now, just to take a quick peek at the year-to-date here, that was a 1-month chart. The peso has actually appreciated by more than 4%. We were starting the year at 50.635 to the greenback in the end of 2019, and now we are at 48 levels. But not so fast in all of this optimism surrounding the peso. ING's Nikki Mapa says that this substantial drop in imports may have helped the peso appreciate, but that is at the expense of capital formation and potential output, which would be an impact on growth. He also mentioned that on the flip side, a stronger local currency may be a bane for exporters. So, for instance, when you export products, it will become more expensive for those abroad to buy your products and possibly make it less competitive for us. Another issue here is remittance receipts. Because of the fact that the dollar translates to less peso purchasing power, we will also have a lower remittance figure. Another thing is exports may become more expensive, as I mentioned already, and that is something that we have already been watching out for earlier on. Now, one thing, though, to be looking out for is gold, and I'm just going to try and break that out for you because this has been in focus, not just for the Philippines, but just basically around the world. There has been a flight to the safe haven currency, and you can see on my screens here how the 1-year level of gold is now closing in at 2,000 per ounce. Now, this, according to the Banco Central, they're going to start actively trading gold holdings as the prices have been soaring. Now, gold right now accounts for 12% of the country's foreign exchange buffer. And they said that they've been trading it passively. Now they're going to be more active. They're going to take advantage of the record high prices in the world market. So our gross international reserves are actually very strong. According to the central bank, this is at a record high right now. We've got around $99 billion in reserves in the central bank as of the end of July. And Benjamin Diokno, governor of the central bank, saying we may just maintain 10% of that in the form of gold. According to the Banco Central, the value of its gold holdings jumped by, get this, 57%. We have around $12.6 billion worth of gold. That's as of the end of July, from $8 billion in the same month of last year. He also said that the studies have shown an optimal portfolio mix of gold to GIR should be around 9.8%. And he said we may have not need to even source gold from abroad. He will be tapping the small miners here in the country and not from external sources. Let's take a quick step back and check in on our global markets. So U.S. markets together with Canada are shut this Monday for the Labor Day holiday. But just taking a quick peek at that slide in Wall Street overnight, look at the Nasdaq down by 1.3% over on Friday. We've actually seen the worst week for Nasdaq last year since March. This, of course, follows it having touched record highs. And according to analysts, investors are now rotating their investments in tech shares onto other parts of the economy. Now, looking over at Europe, also closing on Friday in the back foot. They're still negotiating the Brexit round. There's going to be discussions between the UK and the EU in London. The European Central Bank will also be deciding on Thursday on its new rates, whether that will be cut or stay the same. Most economists are saying it will probably hold. Now, just taking a step back on terms of the virus, right now, more than 26 million people have been infected with COVID-19. Deaths have exceeded 863,000 worldwide. It's really far from over. India has seen a record jump in cases. It seemed to be surpassing Brazil for the number 2 outbreak in the world. Russia has now passed 1 million confirmed infections. But Thailand has had better news. So let's take a quick peek at how Asia is moving. Thailand has gone 100 days without any local cases. Meanwhile, over in Hong Kong, markets will be focused. It's after protests are again flaring in the country in recent weeks. But take a look at the Hang Seng opening right now. It's still up by 0.4% despite those protests. The rest of Asia seems to be opening in the green this Monday morning. What about our own local boards? If you can take a look at how we are performing, we are enjoying that rally together with the rest of the region, up by 0.8%, back to 5,800 levels, 5,833.37. And this is, according to the predictions really of some analysts, which have said that share prices may actually trade higher this week. This, according to Mike Ricafort at RCBC, record low interest rates are making equities more attractive. And recall that last week, the PSEI corrected slightly after having declined for 5 straight days. We finally ended up higher on Friday, up 0.2%, but still we were among a 1-month low, and still we declined 1.7% throughout the week last week. And that is on the back of that's the 3rd straight week of a fall. And this is on the back of value turnovers falling 34% and net foreign selling. Now that saw a 13th straight day of an outflow and nevertheless was trimmed. So still an outflow, but less. Now, another thing that will be watched out for, this according to economists and analysts, are the talks of the Philippines with the vaccine producers. So this from the Health Department. The Philippines will be meeting with representatives of Pfizer and also the Russian embassy on Friday on the back of COVID-19 and trying to source that for our own company. So this was, of course, according to Undersecretary Vergier of the Health Department. Now, let's take a quick peek at which sectors are the bright spots this morning and bringing up our local boards back to 5,800 levels. Take a look at property staging a massive rebound there. That's up by 2.6% after having been one of the worst sold off sectors as of late, and even year to date. A lot of people selling that off, especially as GCQ was extended throughout the end of September, at least in the National Capital Region. A lot of mall stocks were sold off on the back of that, but also financials holding its course. They're up by 1 and 0.6%. Everyone is right now in the green, enjoying some gains here. Now, let's take a quick peek at airline companies. Now, this comes on the back of the fact that Cebu Pacific had already announced some cuts in terms of people, and now another one is Philippine Airlines. They will be implementing yet another round of job cuts. They had said internally that the company would have to reduce its manpower by 35% starting the month of October. So there's no exact number of the employees to be covered, but just as a rough calculation, 35% of a headcount of between 5 to 6,000 employees is up to 2,100 people potentially losing their jobs. Apart from that, PAL has also been drastically cutting expenses. For instance, they've been negotiating with Macro Asia in terms of getting discounts. That is another Lusiotan-led company. This on the back of them having a net loss of 11.6 billion pesos in the second quarter. Another good thing, though, for our airlines is President Duterte okaying the gradual resumption of tourism. And this is according to spokesperson Harry Roque. The chief executive has now directed the Department of Tourism to strengthen its cooperation with the LGUs, making sure quarantine protocols are in place so that they can resume tourism activities. What is the first step? Well, they're going to be reopening Baguio City, or at least targeting to do so. September reopening is the target schedule. Taking a look at our airlines right now, joining in on the rally, Cebu Pac up by 1 and 5%. PAL sitting unchanged at 5 pesos and 93 centavos. So more markets later on in the broadcast with First Metro Securities is Aaron Sai. Okay, let's check in on the biggest headlines we are watching this Monday morning at the start of the week. The government has raised nearly 2 trillion pesos in borrowings from January to July this year. This is to fund growing expenses amid the pandemic. Data from the Bureau of Treasury showed gross borrowing surged to 1.8 trillion pesos. That's in the first 7 months, from just a little over 800 billion pesos year on year. Data also showed local borrowings at 67 billion pesos in July. That's down month on month, and a reversal of the 4 billion peso net redemptions made in July of last year. The government, meanwhile, was able to raise nearly 68 billion pesos from external lenders in July. That's up from the previous month and higher year on year. The government secured 2 loans from multilateral partners in July to be used in COVID-19 response. Program loans from multilateral and bilateral partners have so far reached 280 billion pesos. The government is looking to borrow 3 trillion pesos this year to plug its budget deficit, which is seen to widen to 9.6% of GDP. A 74 to 26 borrowing mix will still be used. That's in favor of domestic lenders to minimize external volatilities. Now, the BIR is offering a program to allow taxpayers to voluntarily settle their tax arrears. This as the agency seeks to reduce its audit investigations amid the COVID-19 pandemic. The VAPP covers all internal revenue taxes for the taxable year ending December 31, 2018, and the fiscal year ending July 2018 to June 2019. Also covered are taxes on one-time transactions such as estate taxes, donor's tax, and even the documentary stamp tax. However, the program excludes taxpayers who have received a final assessment prior to its launch, those already under investigation filed by a tax informer, and those involved in cases of tax fraud, evasion, and other criminal offenses. The new regulation has taken effect starting September 5th. The public has until the end of this year to avail of the program. That's unless the Finance Department extends the cutoff period. The Bangko Sentral says Islamic lenders and Sharia-compliant banking units can support the rehabilitation of Marawi by supporting businesses and infrastructure projects in the area. Bangko Sentral Managing Director Arifa Ala said projects such as public infrastructure, housing settlements, and livelihood or business development are broadly in line with Sharia principles and can be funded through Islamic financing. The same goes for social services and peace building programs. But the Al Amana Islamic Investment Bank remains the sole lender operating under Islamic banking principles here in the country. Ala said the central bank said they have yet to receive formal applications to establish an Islamic bank or Islamic banking units here in the Philippines. The official is hopeful that Islamic banking will improve financial inclusion in the Bangsamoro region, where 109 out of 118 cities and municipalities remain unbanked. It's a start of a brand new trading week, and analysts are looking ahead to upward adjustments. Here to share his sentiment, we have with us First Metro Securities is Aaron Sai. Hi, A. Welcome back.
Hi, good morning, Danie. Thank you for having me.
Aaron, quick review of what happened last week. It was a bit of a disconnect from what happened globally. We could see on Friday, for instance, Nasdaq again slumping, but that's after having had a stellar performance, not just for the Nasdaq but the S&P 500, a global equities rally up by 6%. And here in the Philippines, we were at the third straight week of another decline. What's going on here?
Well, I think the U.S. market. So again, we have seen the U.S. market really flying for the past weeks and months. And I think last week was the first of the first somehow relatively bigger correction. So all indices corrected last week, with the high flyers S&P 500 and Nasdaq declining by 2.3 and 3.27%. And note that both closed below their respective 20-day moving average. So I think if this would be somehow correlated with what happened with VIX, since VIX or the volatility index also spiked after lingering within a tight range for the whole of August. I think if there are two ways to look at it. If the spike in VIX was June 15 kind of a spike, then investors can anticipate a calm in the markets and possibly the major indices try to somehow at least retest their recent highs. But then again, we can't discount the possibility that the spike in VIX last week was just a beginning of a bigger expected volatilities in the weeks ahead. So I think that if that's the case, and then we may see some more meaningful correction in the U.S. indices. As far as the PSEI is concerned, we saw 5.7 holding really good last week. It was tested, and it was last tested when the market went there in the early part of August, before it went to around 5,600, and around 6.1, And then last week, the last 3 days of last week, we saw the market bottoming at around 5.7. So I think the bias for this week was really one of a rebound. I think there's a really good chance that we can, at the very least, test the 10-day EMA at around 5.8, or maybe even try our hands on the 6.167 previous high.
Aaron, let's just go back for a while to Wall Street, because it had been surging even before this whole pandemic happened, right? And even now, despite the rising cases over in the US, it seems to be not connected to the amount of cases that are going on. Some analysts have said that Wall Street indices are euphoric and disconnected, whereas our own local bourse is actually more reflective of reality. Is this really the case, or is there really a case for more optimistic economic growth offshore than here?
Actually, the divergence really lies on, or really is hinged on the composition of the indices. So again, I don't think that the good performance of the U.S. indices do not discount, or is not really reflective of what's happening on the health sector side, on the health side, because I think they are they are reflecting it. Why? Because the best performer in the U.S. indices, which happens to be the heaviest in their indices, are those sectors that might benefit, or that have been benefiting and is still seen to continue to benefit moving forward, even if this is the situation that we're in, or even if this situation we're in will continue moving forward. So I think the market is still discounting or still considering the pandemic, nor still within the mindset of pandemic by buying into the U.S. market, especially the heavyweights in the S&P, especially and of course Nasdaq. So since as far as our own indices are concerned, or PSEI is concerned, the heavyweights are the conglos, properties, and banking. No? So with conglos and property taking the lion's share, and we know that the property sector, which are also in the conglos, no, is really not is really experiencing not a very good prospects from here on. No? So we saw what happened to their numbers in Q2, and moving forward, we don't see yet a reversion to the pre-pandemic mindset. No? So I think the underperformance in the index, not only in our index but also in some other indices, market major indices, as compared to the U.S. indices and those with tech heavy indices, are really reflective of what the market is seeing now, and that is the pandemic.
And when we talk about our own local index, you mentioned, are people now starting to look more long-term pain of economic recovery taking longer? So we just said in the banner, Capital Economics says it might be 2022 pa before you see a recovery. But then, you had Moody's saying that next year we'll already see a positive development. Is that what are markets now digesting? Is it longer term pain, or is it the sentiment right now that is generally positive, with most of the areas seeing a recovery, and even our unemployment, albeit still at 10%, much lower than we had seen in previous months?
Yes, I think maybe borrowing some clue from how the financials, no, both here and abroad, even in the US, no, but more pronounced in the local market. Looking at how the financials are performing in the local bourse, when you see the biggest banks, BDO, Metro Bank, and BPI still lingering around their March lows, then you know that the confidence, no, as far as the global, the broad economy is concerned, is still really there. No, otherwise they would be. Investors would be flocking into this cyclical names, no, cyclical industries, especially if this name or this industry would definitely benefit if the economy recovers. No, of course, recovery and expansion moving forward requires financing, and financing is really the lifeblood of the financial system, or the banks. No, but recently we don't see them. No, we don't see them flocking into these names, which might give us an idea what they really think about at the very least the near future, maybe 1-2 years ahead. No, but then again, the good news is, for banks, for big banks like BDO, no, the 85 peso support level has held. Now it's even bouncing, no. But then again, since the market has already bounced at 85 level for X times now, no, for N times now, for the three major times now, you can discount the possibility that it can still be retested and even break lower, no. But then again, based on what we see now, we hope that if asked if whether we think that the market is looking at bleaker times moving forward, as the financials are in now, I think they are, no. But if there would be a more meaningful bounce in the prices, or in the prices of financials, namely the big banks, no, then that would be somehow reflective of the possible change in sentiment to a more bullish future moving forward.
Okay, wow. So this actually was very related to my next question, because I just wanted to break the July bank loans growth. No, it was 10-year low, and just exactly as you said. So it's up naman, so still positive, up by 6.7% year on year, but slower than what we've seen. But can you say that this is going to be the slowest sprint now, especially since the strictest lockdowns are behind us, and the central bank governor has said it's going to take a while for all of this liquidity to be tapped by the markets? Or is this actually a sign of a sign that forward looking we might be seeing even slower growth in the loans?
Well, the hopeful in me, no, definitely would want to see this as the bottom of it, no. I mean, uh, you need to have that confidence. No, if you're the prospective borrower, no, you need to have that confidence that when you borrow money, that you can at least pay for it, no, or at least make money out of it, no. So if the confidence is still not there, no, especially with some policy concerns with how we are dealing with this pandemic, no, compared with others. I think there would, as of now, there might not be a lot of sources of confidence for potential borrowers to dig in and go to their banks, no. However, as we can see, the relaxation of monetary policies and really measures to somehow rescue, no, those either individuals or companies that might change their mind and might somehow be more optimistic about the future and might possibly be the source of loan growth moving forward, then we will see. No, we'll see. I think I hope there's no more deeper bottom than where we are now. No, but
Mhm.
if in case, I think we should be near the lows. No, so moving forward, I think there's a good reason why we can expect a loan growth to grow to somehow trek higher moving forward, no. But then again, we need to keep watch, no, of the metrics, no, that would affect confidence, and that definitely would be economic activities and disposable income. No, without those from both the supply and the demand side, then I think loan growth would still be tepid.
Hey, why BDO as your stock pick when you look at the banks right now? They are highly exposed to commercial and retail loans, in particular, which are said to be the highest defaulting area here. And then this slowing loan growth pa, is it because of their valuation simply being lower than the others right now? And if so, why would that be?
Well, I think, well, BDO, no, BDO, well, first being the biggest bank, no, biggest bank. I think when again, this is a cyclical industry, no. So again, when mood change, I think the one of the should be beneficiary of that mood change should be the financials, which are again cyclical, no. And BDO being the biggest bank with the widest CASA base, no, and now selling at 44% lower year to date. So I think this can be a possible good catch, no? Especially today, no? Today, as it has been again, the 85 level for BDO is still holding, no? And I think valuation wise, this has been trading in the recent weeks at 1 times book value, which is grossly understated, no, or grossly undervalued, no, by the market compared to its historical mean, no. So again, if we compare the current price to where it was, no, in the perspective of valuation, we have seen this type of valuation during the 2008 2009 crisis years, no. So if we are somehow not too bleak moving forward, then I think if it goes back to at least 10-year average valuation, no, not the recent valuation, but 10 years average price to book, then I think there should be a good 70% upside from Friday's close, no. So and for First Metro Securities side, actually this is BDO is one of their uh, very 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 few select picks, no. And they value this as at 168 pesos, no. That's the
Wow.
target price for BDO. And at current price at 87, then maybe that's more than that's the return, no, it's definitely bigger than the risk as where it is now.
Okay, and you join actually the analysts that are 17 out of 22 saying to buy BDO, 70% upside there for Aaron's high. And finally, Aaron, your other stock pick is EEI. They're supposed to be continuing with that subway project, but so many delays have been going on when you talk about infrastructure, not just them, but also the airports being delayed. Sangli, the requirements not being submitted on time. What makes you think that they are going to be able to deliver during this pandemic compared to others, and why are you still bullish on that stock?
As far as the stock price is concerned, the stock is still in a downtrend channel, no, which started in 2017, no, but since then, no, it has started to since it has just started its upward swing, especially after breaking the 6 pesos resistance. No, last week, no, last Friday, we think there's still a good chance that there will be upside from where we are now. Now, as far as the contracts are concerned, yes, I think the delay should have already been baked in on the price, no. But note that that the projects have already been awarded to AI. You know, that's why as of the first half of 2020, based on their disclosure, they have at least 55 billion pesos of unbooked, no, or we call it the order book, no, for AI, and that's worth around 2 years worth of revenue, no. So again, I think this is a cyclical, no, this is cyclical industry along with the banks, no. If we can somehow extend our time horizon, no, to maybe 2, 3, 4, 5 years moving forward, and leaving behind the somehow a very bleak or very pessimistic tone from what we're experiencing now from the pandemic. I think if it somehow revert to its mean valuation, then I think we are looking at a good upside to from where we are now to around 9 pesos. No, but then again, if we are just looking at 1 times book value, then the target price for EI is 750, which from where we are now is a good 15% upside.
Okay, very exciting actually, and thank you so much for that optimism. That was of course Aaron Cyphers, Metro Securities.
Thank you.
That's a first look into the business day this Monday, September 7, 2020. Catch us again tomorrow morning, 10 a.m. I'm Danie Laurel and we are News.